is really strong, and you're only able to take out so much money here out of the 330 call right there. So basically it's 1590 by 16. We got a 1520 bid. We got a 1480 wholesale hook off the left. That's what we got burning. Right now we're burning at that ratio, went negative 0.7. It's got to stop right around in here to have this low support. Otherwise, that you got a double diamond. Diamond 1 is right here. That was 29 pennies the whole bar. Okay, 16th today is 38 pennies, a little bit less than a teeny. Up here, 342.01. Down here, 341.84 is half bar. So we got a double diamond alert in this area here. Now, when I go over here to my info panel called the SMF Market Maker panel, I done took that short twice, that long once. I'm in a second long, and I'm getting made as a market maker down here. Because if there's no more seller, then you got to walk that dog. That's why they're buying a seller every day. Okay, Mr. Mayo.
And I'm watching Amazon
Mr.
as well.
Mayo, you got entries, Mr. Mayo.
Yes, sir.
Right there, 1580. You sold 1650, got 1580. That's on the 330 call.
You're getting ready to go long Amazon.
We had that first
What's
369 off that bottom. Now we got a 3, we got a 6, we got
Not
a 3.
yet.
You want that 3 to be as equal price action distance as the 3 was coming down, and you'd like to see that greater price out breakout.
Price line is putting in the
Ratio
bottom.
0.3. You're going the right way, Mr. Mayo. I've got 0.03 and 0.35 holding at the diamond. And once again, folks, it's all about wholesale. Look at these are all live entries. If you're in denial because of the way you do your thing, well, you're part of the public model. And a market maker model is always trading against the public model because they know how they're going to jerk your emotions. However, the platform, the wholesale entries, the spreads on both sides of the tape is something that the public just can't seem to come to grip with, because down here they're so scared they ain't touching it, or they wrote it all the way down to start with, and then they're all flustered. Oh boy, but we're making breakouts and we're making another
Where'd
big
you
pass.
get in?
That's another big pass in them calls. This is a special 330 call against that 330 put. So we got double debit this way, and we have double debits down and double debits up here live right now with Mr. Mayo, brand new MMT. On this tape, here you go, MMT. 1 debit, 2 debit, 3 debits, 2 debits down. The broader move is down here at the intraday bottom. I've got him out to buy some more calls at 1550 after selling up at the high. And yeah, I get to be wholesale again. Sorry to inform you. So basically what I want people to know, Mr. Mayo, is you keep your order down there and you watch 0.8. If you don't go above 0.10 negative, well, that's a good thing. So 0.10 and lower, you're doing good. And the bottom, that was the short. Let me tell you something, MMTs. The length of the short for now at 7:52 a.m. Pacific Standard Time, date 1/11/2011, is that you've got to see sometime before the closing bell is that you're going to have to get a breakout that was like the breakdown off of the long-term bottom. Once everybody is all out, that market maker will have a clear shot of trying to get that move going. Another thing is that the intraday short sellers get squeezed up, because he'll try to walk them off of the lows so that the shorts try to panic. You had some short covering there.
We're above
and you had
38.
some short covering there. And you had
Above
a little bit of short
35.
covering
Need to break
there.
and close above 46 pennies.
Intraday, the short sellers remain on the equity at 1 hour and 23 minutes into the tape. 7 more minutes, you'll have an hour and a half into the tape. There's a 330 call. We traded the 330 put as well, because we did. And basically we have a whole slew of different contracts that you can engage in. The below the market 320 call is tradable. The 320 or the 330 put, which was the one that he was trading the other side of. There's a January 330 put that expires next week. It's fairly cheap, but it does have a range that you can trade as far as put option 330. And let me tell you something. The call is inflated and the put is deflated. That's when nice pullbacks can happen. So basically being on both sides of the trade, long and short, is what it takes to be an SMF MMT. And that way you're getting both debits on both sides of the market. You're shorting the equity, you're buying the put, so you get paid twice. You're buying the call, you're going long, you get paid twice. There's 4 times you got paid. Going long again and coming out at the top and going long the call, you got paid twice again. So there's 6 times you got paid, 8 times you got paid. And if you include his last entry, that's about 10 times he got paid by using long and short the equity, buying long the call, buying the put, and there's lots of way to pile those other debits up. With Apple going down, if you wanted to add more debits to the trade, you should have been shorting the TQQQ bull, because when Apple went down, the bull went down, so you could have added another trade and another debit. And don't tell me about all your retail talk.
Amazon at 40, above 46 pennies.